Hi friends, so today we are going to do another video on our financial planning series. First of the video in 2025. First of all, wish you all a very happy new year. Let this year be an year of good health, wealth, joy, prosperity, happiness for you all guys. Many of the viewers are my students, so let them become chartered accountants. Many of have already qualified. Let them secure their financial future and plan their finances properly. So in this video, I'm going to talk about certain key pointers or key messages which I want to give for 2025 so that you are able to secure your future and you avoid making these mistakes. These mistakes have been made by many of our clients, some of my friends. So their experiences, I'm going to give it to you in the form of 10 key points, just 10 points for you. And these are the points which we normally tell whenever a client comes to us for a financial planning discussion. So these 10 key points you'll have to take care. This will ensure that you are able to secure your financial future and don't worry about the past mistakes which you could make. So to avoid all this, it's few do's for you and few don'ts for you. So some of the points I want to talk about is the first important point I want to talk about is early closure of loans. See, many of us take loans for multiple purposes. You could take an education loan, you could be taking a housing loan, and some of these loans go for a longer period. So our first advice is please close your loans as early as possible. Even if you don't make any investments, it is okay. First and foremost thing you have to do is close your loans. Why should I close the loans? There is a great peace which you get by closing the loans because you are not now worried about the EMI which will get debited on a respective day. Your salary comes and EMI gets debited, so all those troubles are taken away. Don't compare your rate of interest on the loan versus the return which you can get from investments. Many people do that comparison saying that I will earn more and pay lesser interest. No, don't do it. We are not willing to take these kind of risks. We are not businessmen. Businessman takes that risks. He borrows, he invests in fixed assets and earns return. From our point of view, let's be very clear. Close your loans as early as possible. In fact, if you have taken a housing loan, increase your EMI just by 10% or make one or two prepayments. Bonus has come, make one prepayment. That itself will reduce your loan tenor by sometimes 2 3 years or 4 years. Just one early payment. Second, avoid credit card trap. These two don'ts are very critical. Avoid credit card trap. Interlink. These are interlinked area. What happens is the current generation believes a lot in plastic money, and because of this, when you want to buy something, and you don't have the money available, you say let's use the credit card. There's no problem if you are using credit card prudently, but don't get into a trap, because if you get into a trap, it will become very difficult to recover out of it. The credit card trap, because the interest rate of interest can run very high, sometimes it can be even upwards of 24%. So let's not get into this. An interlinked area is avoid futures and options. Avoid futures and options. See, many people think that I can make faster money. I'll come and tell you that you invest 1,000 rupees in the morning in an option, and by the end of the day it has become 1 lakh, 100x, something like this. When I say, you become very excited and feel that okay, futures and options is where I'll make money, I'll secure my future. And who's telling this? These are being told by people who are taking classes on how to do the FNO investments. I don't know why they are running those courses. If they are so confident about that, they themselves can make those FNO investments. So many people run those courses, and in fact, we have looked at some of the balance sheets of these people, and their main income is only the lectures which they take, saying that do FNO investments, do FNO investments. I'll make you a smart investor, smart trader. No, FNO is to be avoided at any cost. 95% of the FNO investors are making losses. This is a stats which is released by SEBI. So there's no point in doing futures and options. No faster money. It will not make fast money. Who will become richer is the broker and these people who are selling their courses on futures and options. Automate savings and investments. What does automate savings and investment is? Let's make it a habit that 30% of my salary, 20% of my salary, 40% of my salary, whatever number you decide, will directly go into investments every month. How can it go? You can transfer it to a separate bank account. From there, you can do something to recurring deposit, something to your mutual funds, something to your equities, something to gold, something around that you can do. But you will have to automate it, or do SIP. That's all. Directly do SIP, and we are kind of taken care. Build an emergency fund. Emergency fund is very very critical. Reason for emergency fund being very critical is in case suddenly I lose my job because of XYZ reason. We have seen in the past whatever happened, COVID had come that time. So sometimes our incomes go down. 6 months of our expenses, 6 months of our expenses should be in an emergency fund in the form of ideally a fixed deposit, because fixed deposit can be broken at any point of time. 6 months, please keep 6 months of your annual expenses, 6 months of your annual expenses in an emergency fund. Invest in health insurance. I think this is one of the most important item which you should take care. There are two things. One is education inflation and second is healthcare inflation. These inflation is very high as compared to the normal inflation of India. The RBI may come out saying that inflation is around 6%, 7%, 8%, but healthcare and education inflation is very high. So to tackle the healthcare inflation, only option I have is to take a health insurance. It's easy for me to pay a premium, but very difficult to pay a huge amount like a 5 lakh bill or a 10 lakh bill. So I can quantify minimum 5 lakh of insurance and you can take some top up, or a 10 lakh insurance. Avoid lifestyle inflation. Now, many a times, the both are limit lifestyle inflation and avoid impulse purchase. Both are interlinked. Now, what happens is my income start going up. Moment my income start going up, what people end up doing is, because I'm earning more, I want an upgrade in my lifestyle. The upgrade in lifestyle could be that you want to buy a car. I'm not saying you should not buy a car, but check, is there a need for you and can you manage that with your income, or can you defer the purchase by some time. So impulse purchase and lifestyle inflation, because people suddenly feel that I want to upgrade my lifestyle, and because of that upgradation their annual expenses shoot up significantly. If they shoot up significantly, it will become very difficult for you to manage in case there is a decrease in your income, because there are a lot of uncertainty in the practical world. You can suddenly have a very good year and then have a very bad year as well. So let's be practical. Let's have some control on lifestyle inflation and impulse purchase. Impulse purchases, because of all this, your big billion day sale. First thing we should do is eliminate all these apps from our mobile. I also have the apps, Amazon, Flipkart, Myntra. All this will force us to keep buying newer things. Okay, that's good, but somewhere you will have to control your purchases. Start a retirement fund early. Now, what is starting a retirement fund early is, you need to take care, you need to first agree on a fact that you will not keep earning for throughout your life. There is a time period at which you will stop earning. So when you stop earning, you need some income. That income will come out of your retirement fund. That income will come out of your retirement fund. Our normal approach is 20x of annual expenses should at least be in a retirement fund. That's a minimum. 20 into the annual expenses adjusted for inflation. In fact, I have a video separately on how to determine your retirement corpus. You can see that. And diversify investments. Equities are good, debt is also good. In fact, there's an ad which says equity is good, debt is good, gold is good, everything is good. So that is why you should diversify the investment. When you are of young age, please do more of equities and gold. When you become older, do more of debt investments. Debt investments is fixed deposit investment. I think these 10 key points, if you take care, you will secure your future. Otherwise, it can become too late. For you to secure your future. So, I wish you follow all these tips. get back to me in case you need any guidance. In case you need any guidance, any help, my WhatsApp number is there in the video description. I am there always to guide you people, uh, for your chartered accountancy as well as for your post chartered accountancy. That is, in case you want to make certain investments, plan your investments, plan your financial future, do have a discussion with me so that I can help you out with that. Thank you, friends. Again, wishing you a great 2025. Let's grow and shine in this year. Thank you, friends.